now spoke with Sunil Singhania in order to garner a perspective as to what his outlook is on the equity markets. Now, he is of the view that while there are a number of negatives in terms of the rising cases, he believes that the vaccination drive picking up steam is going to be a big positive. So there are cases rising, but the number of doses as well that are being administered, that too is rising. He also believes that the markets are expecting that things will get better and will improve over the next 3 to 4 months. And as of now, investors are taking cues from all parts of the world. Demand across the board, he believes, remains fairly strong, and the China +1 factor is definitely aiding the export scenario in the country. On the macroeconomic front, he is very optimistic that we will see a recovery, and that's particularly on the back of the fact that the vaccination drive gathers pace. He believes that once 40% of the people or the population gets vaccinated, we will see the number of cases going down. He's also of the view that infrastructure investments, that is rising globally. He has a decent exposure to the steel sector and believes that for the long term, IT as well as pharma are steady long-term growth pockets. In fact, he believes that the commentary as well that we get from IT companies when it comes to their earnings, that has been very positive. And that continually needs to be monitored. The weakness in the rupee as well augurs well for IT as well as the pharma sector. As of now, there's been no significant change in his portfolio allocation over the last 3 months. In terms of what could be another niggling factor will be inflation. He does believe that inflation will inch higher, but it's not going to be a scary factor. And largely is of the view that the Reserve Bank is fairly committed to maintaining a high liquidity and a low interest rate regime, and that could potentially offset the impact of the high inflation scenario in the country. So he's not overly worried about that when it comes to the macros in India. He believes that an investor needs to balance their portfolio as of now, having both global as well as local focused sectors in the portfolio. He does see plenty of opportunity as well in capital formation linked sectors and believes that investors can definitely look at this from a long-term standpoint. Going forward, he says that you need to look as well beyond banks when you're looking at the financial space. There's plenty of focus on steel companies right now, and he expects that the base effect as well will aid recovery of earnings. Good demand is what he sees in the cement as well as steel space, and he believes that this is going to augur well for the infrastructure sector. He believes that different pharma companies have different strengths, and he doesn't prefer investing in any single firm on the basis of news flow. Be agile, but definitely look to, or there is some merit, is what he believes within the PSU banking space or some of the PSUs, and he believes that one cannot have 15 to 20% of the portfolio in commodities.